Hello and welcome to today's morning briefing and weekly briefing for the markets. But we'll cut the talk and we'll get straight to it. Jerome Powell ultimately has said that inflation is too high and he is planning to introduce a more restrictive policy, more restrictive monetary policy. This meaning he's willing to keep rates higher for longer. He is willing to raise rates despite already having rates around the 5.25% mark. He's still willing to raise them further. Now it's expected that these rates won't be increased in the next Fed meeting in September, but they are still expected to increase. Inflation was 3.2% for July, when it's down from the peak of 9.1%, but ultimately it's above that June percentage rate of 3%. And so ultimately he's worried of inflation becoming entrenched. And so it's a goal now of the Fed to prevent inflation becoming entrenched, whilst also preventing any negative effects on the economy, basically to do with monetary policy being tight and hawkish. And so they are making sure that this won't affect the economy in a negative way. This is also, spoken. This has also been, said by a senior Fed official for the Boston Fed, Susan Collins, who essentially, drove what Jerome Powell said, but a few days before, and she kind of, she spoke about how she was surprised by the economy's resilience, to do with having a tight labour market and robust spending despite having high interest rates. However, she said that this was not to worry, basically, because ultimately the US government spending has been, the increased government spending, has required a great amount of US borrowing. And with this large amount of US borrowing, ultimately what's followed is, increases in the yields of Treasury bonds, as well as increases in mortgage rates. And so she believes that ultimately these kind of secondary factors to increasing government spending and government borrowing, this will have the same sort of effect of increased interest rates by the Fed. But obviously she's also said the same things to do with Jerome Powell around increasing interest rates, saying that they have time to wait, basically, before deciding, due to the fact that interest rates, the effects of interest rates take a while to be felt by consumers, and a year often. And so whilst they have a high rate of inflation, they also have a high interest rate, and so they're able to wait patiently until they see the effects of that high interest rate on consumers before they make the decision on whether to raise rates further or not. But she expects, or at least she understands, the possibility of raising rates further. We also have the effects that this has had on the markets, and ultimately US Treasury yields was the main kind of financial product that was affected by the speech and by the meeting, the annual meeting of the Fed in Kansas City, where they all kind of get together, a lot of central bank officials, and they discuss inflation and central bank policy. And obviously it was a hawkish tone which came out of this last meeting. And so how did US Treasury yields respond? Well, they rose along with the dollar, along with commodities, and ultimately they saw a sell-off of government bonds, which in turn obviously causes an increase in the yield of those bonds, with there being a 16-year high at the start of this week, and this was continued with the 2-year US Treasury bonds rising 0.06 percentage points to 5.07%, while the 10-year Treasury bonds was steady at 4.23%, because obviously bond yields rise as prices fall. Surprisingly, also the S&P 500 and the Nasdaq 100 also responded positively to the Fed's speech, with the Nasdaq climbing 0.9% and rising 2.3% over the week, and the S&P 500 finishing 0.7% higher and advancing 0.8% for the week despite a choppy market, right? And so with gains across 5 sessions ending a 3-week losing streak for both indexes, so positive signs for US indexes despite hawkish policy from the Fed, which is surprising. As mentioned, despite most expecting federal funds rates to remain the same, the labour market remains tight and consumer spending is still relatively healthy, signalling that rates aren't high enough, and so we are expecting rate increases in the future. Brent crude oil and the US equivalent added 1% to a trade, with a jump in oil prices coming after they were headed for a second consecutive week of declines as a result of concerns over China's economic outlook, and interest rates raise concerns over future demand for the fossil fuel industry. We'll come to a lot of these indexes and commodities on the charts, as well as gold and other forex currency pairs. But next we're moving to China, where essentially there has been a very sluggish rebound. There was a lot of growth essentially in the first quarter. However, a lot of companies have seen how there's been very poor growth in the second quarter, and this is poor signs for a lot of the companies that have been working in China. A lot of the companies have essentially said that production is lower than usual. There's been falling exports, weak retail sales, and a poor property sector, which has all weighed on growth in China. There seems to be a structural issue to do with youth unemployment, that being around a lot of parents are putting lots of money into their children's education, expecting great results. They put a lot of money into the real estate market, and they lost a lot of money in the real estate market, and they're also seeing a lot of their children be unemployed despite having a well-funded education, with youth unemployment in China being 20%. And so this has caused a lot of dissent from the government almost, and a lack of trust to the government, to do with how they'll manage the economy, because obviously coming out of those strict lockdowns there was very little production, and now production's kind of starting up again and they're not seeing that growth. That's just weighing more on the lack of confidence in the real estate market, in the business sector, and also just with all individuals and families. China's responded to this kind of slumping growth, which is 0.8%, rather than the 2%, 2.2% in the first 3 months. As I said, 0.8% in the 3 months to June, so down quite significantly. And China responded by announcing a package of financial market reforms earlier this month, and they've cut interest rates by less than expected, and thus spending has failed to pick up. Exports are down and consumer prices have fell last month. So even their intervention, which is often respected in the West, due to its ability to kind of allow the Chinese economy to rebound, despite that increase in government spending in trying to grow the economy, it's still not seen a rebound. And so for a lot of these foreign firms, they're starting to see that it's not a cyclical issue and it's more of a secular and structural issue, and that's obviously weighing on their minds. And so some of the businesses, though, obviously are taking the more long-term approach and just viewing this as a wobble within the economy, and that in the long term they're going to generate profit for them, so it's all right. To the next article, we're speaking about the US Commerce Secretary, who essentially flew out to Beijing recently, following five other, I believe it was five other secretaries have also flown out this is the fourth senior Biden administration official to visit Beijing this summer. But yeah, she's flown out there essentially to discuss tourism, surprisingly, as a way to increase some sort of trade and business relation between the US and China. And this is amid, a lot of the national security issues to do with China, their spy balloon, their links to Russia, and a lot of the fears to do with Taiwan, and Joe Biden's recent ban on technological investment into China by US citizens and companies. And so it's kind of a very tense situation, and this is sort of an attempt to break the ice and still keep relations to do with business friendly rather than hostile, despite national security issues. She still said that protecting national security is a top priority, and she doesn't want to. She's spoken about how there are many challenges to doing business in China and exporting to China, alluding to what she's called Beijing's unfair trade practices. But she's also seen that the possibility of increasing tourism between the two nations could actually cause an increase in jobs back in the US, and a political win for the Biden administration in the lead up to next year's national election. And so it's kind of keeping those business relations good with the two nations. Sorry, that was a bit of a poor sentence. But yeah, going back to the technological ban by Biden, this has obviously had a large effect on the private equity industries and the venture capital industries. And so it'll be interesting to see how all this will work out within the actual markets to do with the trades, to do with the trade partnership between the two countries, and whether this is even gonna have a remote effect on the damaging effects that have already been caused by the technological ban by the Biden administration. And lastly, on the news front, we come to the Republican primary debate, which allowed for a kind of allowed for the line between the Trumpists within the party and the anti-Trump side of the party to kind of be clear. And what ended up emerging was the new up-and-coming entrepreneur kind of political candidate Vivek Ramaswamy kind of rushed to defend the indicted ex-president, whilst others were more critical, such as Chris Christie, Nikki Haley and Mike Pence. And we even see Ron DeSantis even speak of Mike Pence and respecting Mike Pence for denouncing Donald Trump after Donald Trump's claims of an illegitimate election last year. Now, this is all coming after Trump faces more charges in Georgia, surrendering himself to the Georgian kind of police, and as well as other looming criminal trials in Manhattan, Miami and Washington. So it's a very hot time for the Republican establishment, obviously, and it's trying to find the line within the party to see who kind of supports the president and who doesn't. As I said, ultimately, Vivek Ramaswamy is kind of the leading candidate to do with the Trumpist side, and kind of Nikki Haley and Chris Christie and Mike Pence are all around the same level of polling numbers, and their support is all quite similar. They all have quite a moderate position on abortion, and they all seem to support the funding of Ukraine and continue supporting them humanitarianly and also through the aid of weapons, whilst Vivek Ramaswamy kind of is with the more Trumpist crowd, which believe that we should cut all funding to, well, not we, but the US should cut all funding to Ukraine and stop supporting them, basically. And so the outcome ultimately, obviously we've seen Ramaswamy kind of gain, and all of the dissidents from Trump, such as Pence and Haley and Christie, still kind of remain within those single digits below the 5% mark. DeSantis obviously dropped down since earlier in May when he was more popular. And so what we're really starting to see is, Trump still maintaining the polling lead, but it's just whether he might be able to win the Republican primary, but whether he can actually win the election's another story. But it'll be interesting to see how all these debates over how to support Ukraine will actually affect the defense markets, and so that's something to keep your eye on. But now moving over to the charts, let's bring up the markets. So here we have the Dow Jones. I just wanted to bring this up to start off with because obviously we're looking at all the indexes. And let's just do a quick overview of the indexes. Ultimately, with the Dow Jones, we've got an area of resistance here around the 4,000 mark, 3,400 mark. Sorry. There's obviously a level of resistance here. Now, following gains with most US indexes after the Fed kind of conversation, we would expect it to push higher. However, so obviously the Fed's rhetoric was, a tighter monetary policy. So it'd be surprising to actually see, the markets break above this area of resistance. And I think what we're more likely to see is the Dow Jones kind of roll to the side and fall down a bit more to meet this area, this trend line, to decide whether it should come back up more again. What is that wording? To decide whether it wants to continue its rally upwards, because obviously it kind of dipped down in September last year, and it's been rallying since, but meeting this area of resistance has been tough for it. The Nasdaq 100 obviously had a positive performance coming out of Jerome Powell's speech, but there's this area of resistance which it came into contact with around the end of July, and it's still not been able to break it. Now this is the high of the Nasdaq 100, but it's whether now we've heard that rates may increase further. It's whether there'll be the Nasdaq 100 will actually be able to break out that resistance and make new highs, or it will continue lower until the signs of rate cuts kind of are made clear, right? Because obviously higher rates make it harder for businesses to accumulate finance and grow their businesses and produce more. And so it's just simple that it's going to be hard for a company, a collection of companies like an index, to break above and make new highs to do with its ticker price if they can't gain finance. Now going to the S&P 500, it's been rallying since October last year, and it's kind of been in this channel making a trend line upwards, but it's kind of pushing towards areas of strong resistance and support in 2021 and 2022, sorry. And this area of liquidity and strong resistance and support was made last year, and so it'll be interesting to see whether they'll actually be able to break out from there, or it will just find its level of resistance and come back down. But yeah, and moving to the dollar, if we can get that loaded up, as we can see here, coming out of Jerome Powell's speech, we were kind of hovering just above this channel, just above, kind of breaking out from that downward trend line. And so it'll be interesting now we've heard that the rates are likely to stay higher for longer and possibly even see rate hike increases. It'll be interesting to see whether we'll now be able to see the dollar rally upwards and out from this this downward trend and kind of push to highs around some other areas of resistance. And we've seen that reflect in other forex pairs such as pound dollar, which have recently broken below areas of resistance and support, recent areas of support such as here around the 1.264 mark to 1.268 mark, and we can now see whether it will continue lower, maybe by hooking up first and gaining some liquidity before moving down. Same for euro dollar, which has fallen below an area of support, and now that we know that rates are going to be staying higher for longer, we now know that dollar's likely to continue rising, and so depending on euro news, we're likely to see a fall to the downside, maybe to this 1.066 area, but before that, possibly hooking up, getting some liquidity, and then moving down. As we can see here, it already sort of has gained the liquidity to move, but it'll be interesting to see how that will work out. Now, pound yen's in a very interesting position, mainly because it's in this kind of upward trend, kind of a flag, but it kind of found support, and liquidity earlier on last week, and it kind of bounced off that area twice, and now it's kind of sitting around the 38.2 Fibonacci area. But it would be interesting to see whether, now it's in this channel, whether it's able to move up to this 61.8 fib before continuing down to the bottom of the channel to gain enough support to move higher further. And so ultimately it's just going to be interesting to see how you can kind of trade this channel with all the fundamentals going on, obviously. But yeah, that's the current situation with pound yen. I'm looking at this 61.8 area as the main area of liquidity for the downside, and then if it does come lower, ultimately we've got areas like 182.5, which should be strong. But on the upside, which might cause a push to the bearish side, we've got 185.5, which looks key to the situation. And US dollar is making new highs as we speak. It's reaching areas last seen in November of last year, and so it will be interesting to see whether it can break out this area of resistance and move to those new highs, or it will just bounce down from this area of resistance that we've seen be touched twice, if you see what I mean there, and move down further. But obviously now we've heard that the dollar's going to remain strong. I believe that we'll be seeing something like a push out from that area before kind of push above this area of resistance before kind of using it as support to move further. And so I'm expecting something like this to something like this, and then obviously moving further. So it'd be interesting to see how this all plays out ultimately. So definitely pound yen's an interesting one to keep your eye on, now that we've got the fundamentals to understand that dollar's going to be moving up. Moving to gold's very interesting. Obviously the dollar's going to be getting stronger, so we'd be expecting gold to weaken. It's kind of recently hit this area of resistance that we can see on the daily. If you kind of see here, there's this sort of strong area of liquidity that was wicked into earlier on, and on the 4 hour, that's obviously replicated lots of wicks moving into this area, so we know it's a strong area of liquidity. We've got a 61.8 fib there, based on this downtrend movement, and so we know we've got a strong area of Fibonacci kind of confluence, a strong level of resistance, and it kind of bounced off that before bouncing down to an area of liquidity on lower time frames around the 1903 mark last week during Jerome Powell's speech, just before Jerome Powell's speech. So it'll be interesting to see whether now it will move to the downside, because the fundamentals are showing the dollar strong, and so you'd expect commodities weak, or it might just use this area of liquidity here to move higher despite the fundamentals around the dollar. So keep your eye on the dollar, and gold as well. And moving to the bonds, obviously we've spoken about the bonds before, so there's not as much to talk about. But the yields are going up basically, following the Fed's speech, and so keep your eye on the Treasury bonds, obviously. And as I spoke about before, to do with US oil, it kind of was experiencing a long period of downtrend following in the lead up to Jerome Powell's speech. But during Jerome Powell's speech, it seemed that they were able to make gains for the first time in around 3 weeks, and so it'll be interesting to see whether kind of all the oil and commodities can break out this kind of downtrend that they're in, despite a lot of the fundamental news to do with China's weakness and the lack of demand for fossil fuels. Now that we're done with the charts, we can go back to our talk about the economic calendar. Now, I just want to bring this up because we have a lot on the table for the economic calendar this week. To begin with, I mean, we have US consumer confidence coming out. We also have the German inflation rate to see how that, dollar and the euro will be affected. So if you're going to be trading that, keep your eye on those two data releases. We also have the US GDP growth rate. So obviously we're looking to see whether stagflation's at play, or we're getting growth but despite the inflation. And we're also going to be looking at German unemployment figures, euro inflation, US PCE inflation, US NFP and unemployment figures, US ISM manufacturing as well. So there's a lot to keep your eyes on basically this week for data releases. Now there's very little expected with earnings releases, so you can't be expecting too much to do with stocks this week, but certainly there's a lot of economic data coming out, so you need to keep your eye on that if you're going to be trading it. But really that's it for me. Thank you for listening. Sorry for the video being such poor quality, and obviously they'll get better in the future as I make more of them. But yeah, no, thank you for being here, and I'll see you in a bit. See you, bye.